Welcome to Market Update featuring by Rationale and Marketsall. Today I'm diving into the latest market updates, breaking down key developments as usual. Remember the 25% tariffs on Canadian and Mexican imports announced last month. They're officially set to take effect at midnight, along with an additional 10% on Chinese goods. This round off like a tariffs like targets like three trading largest partners of US, impacting roughly 60% of the total imports in United States. Volatility has spiked with a sell-off in S&P 500 and crypto market. Also, there's a leaning into risk-off sentiment. Let's find out what's driving the market. First of all, in this video, I'll be covering what's going on in general market, and I'll go with a major. I'll be showing some the impact of those developments on some major charts in FX markets, equity markets, and some other commodities. First of all, I'd like to talk about the market shift, tariffs, rate cuts, what's next. First of all, last week, the market narrative completely shift at the beginning. Up until the last week, there were always a sell-off at the beginning of the week. Initially, tariffs were seen as inflationary up until last week, but new data coming from a retail side, retail companies like Walmart showed that consumer spending is feeling the strain. Now the focus has moved from inflation concerns to growth risk. That was the main narrative of last week, and there were for sure there was major implications on equities, the Fed, rate cuts. So this shift combined with a retail, the weakness in retail side, shifting from inflation concerns to growth sides, combined with solid let's not say solid, but at least relatively it wasn't a bad earnings from Nvidia, led to an equity rally as a rate cut expectations surged. But as we entered this week, uncertainty is back with crypto volatility, tariffs, political risks on last Friday debate between Donald Trump and Zelensky. So these are currently weighing on the sentiment. To break it down, first of all, last week's market shift from inflation to growth concern. I would like to get in a little bit deep on that. So retail data was a game changer. Consumer spending is slowing, which means tariffs aren't just pushing prices up. Because what was the main mentality? If tariffs gonna come, there will be huge inflation. So with the higher inflation expectation, dollar index rallied and stuff, and that's why that was the main chain of impacts. That was, up until last week. But now the concern is more on about demand side. This shifted the market's concern from inflation to growth risk. So with that, rate cut expectations surged because if the concern is the growth, then the market expects Fed to act sooner than expected. The probability of June rate cut is now approximately 100%. It's for sure it was around 90% when I last checked. The mentality shifted that. Instead of just consumers paying the price for the tariffs, the market sees tariffs as tightening foreign producers and US importers side too, if their profit margins too. If a corporate profit margins take a hit, the Fed will have the reason to step into rate cut. If the tariff comes up, the first reaction of the market was, okay, the price is gonna go up, but okay, who's gonna pay this price? That will be shared. That's the current expectation. It will be shared. But the thing is, the foreign exporters to US do not have that much room to give out from their profit margin already. So probably US companies will be hit from this like tariff side. That's why the growth concerns came in, and like that, like in that scenario, the forecast on economic growth in the that were given in earnings announcements of the companies will be judged after a point, and with that judgment, I mean, yeah, the first reaction is okay, rate cuts gonna come up, but depending on how big this tariffs will impact the companies, we'll see pricing accordingly. Apart from that, tech earnings help. Like tech earnings set, with that said, I'm trying to say Nvidia's at least not bad results reassured investors last week and adding to upside. So with the rate cut expectation, when Nvidia pushed the markets up last week, that was the main thing. This like we saw a strong equity rally last week. So when we come to this week, what happened? Uncertainty returns. Cryptos, like we saw a wild ride in cryptos. Risk off sentiment kicked in. We saw that on Saturday, I guess, they were like, for example, XRP like was like a 30% up, the other day 30% down. There was a huge rally. We started the week with a like massive crypto rally, followed by an aggressive sell-off. This like a spook, like a broader markets fueling risk off momentum. Actually, these all started with probably that political tension that was between Ukraine and US. The tariff uncertainty is back again, like because Trump has announced that on Tuesday, I'm recording this video Tuesday morning in Eastern time, and like Donald Trump announced that Tuesday night he's gonna have like a speech, could set like a tone for like there's gonna be a speech about like still uncertain. Probably that will be about tariffs, because like as I mentioned in the beginning of the video, this like midnight the tariffs that were imposed to Canada and Mexico will be intact. It's been a month, and yeah, his speech probably will lead the direction of the market. With limited details on upcoming trade policy, investors are waiting for clarity. So I believe that after this moment, of course, like tariffs will be the first thing for sure, will be decisive on like a market pricing, but we need to see some distraction on growth through some hard data like non-farm payroll data. On this week, on Friday, will be crucial for market pricing. If the job market show weakness, it strengthens the case for early rate cuts. If it's too strong, the Fed might have less urgency, which would be adding to volatility. So how to read the market reaction? That's the question. Why is the market currently selling off? What like my perception is, if markets see tariff, it all depends on market's perception. Okay, there's no like, unfortunately it's not 2 + 2 = 4. It's a difficult game to read. If markets see tariffs as a major risk to corporate profit margin, I think, which will be dependable on the infrastructure, structure of the tariff package. But if markets see tariffs as a major risk to corporate profit margins, the sell-off could continue. But if investors instead focus on rate cuts rather than that, like tightening profit margins, that could be offsetting the impact. We could see another rebound from here. And currently, like US equities indices are trading around like a S&P, as far as I remember, around like a 200-day moving average. It's like a pretty like a critical point. Yeah, that's how I read the situation. If it's a major risk for profit margin, sell off. If they focus on rate cuts, there might be a rally. Uncertainty is the real problem. Markets do not like surprises. The administration has hinted at like a big announcement on Tuesday night without like a clear details, and like a risk of sentiment is growing for sure. Like for example, when since the beginning of this year, when structured tariff plans, like for example Scott Bessent's announcement and his step-by-step approach were introduced, markets reacted really positively. If like a policy makers take a more like at least sensible approach in 2025, for the rest of the years we might see better pricing on especially equity and crypto markets, let's say, like on risk on sentiment. It will be fooling risk on sentiment. That's what I'm trying to say. And as a result of all of this, like to just like evaluate the main picture, I would like to just like share my bias for like some instruments. First of all, treasury bonds. Current sentiment is bullish because like a risk of sentiment is the current situation. There's like a relatively high yields around, and the like big funds are parking their money amid this uncertainty. Dollar index, I'm neutral to bearish. But I mean, sorry, like neutral to bearish is not actually. I'm more neutral. Why I'm saying bearish? Because of the rate cut path, but technical side is a bit contradicting with there. That's why I like I kind of avoid to be bold on dollar index for sure, because it will all depend on tariff narrative. You know, it's impossible to forecast such thing, and I don't think that it's correct to comment on when there is such uncertainty. The US dollar is getting like sold off right now. I mean, the reaction of the XY keeps changing. On the pound side, as I mentioned in like in my like a previous two videos, I'm on the bullish side still. The UK was set for a rate cut, but sticky inflation has like policymakers rethinking their current situation, and they had revised their inflation expectation to up. Japanese yen, my bias is bullish. Why I'm trying to say, because on FX instruments, before finding like a technical spot or before like generating a game plan, first of all, my bias involves in that trade idea. When I'm biased on Japanese yen long idea, then I'm ignoring any kind of technical picture that I see on any kind of Japanese yen pair. That's why I'm like explaining this right now. And Japanese yen, like my bias is more bullish. Japan's still like sticking to its rate hikes, and like because of the interest rate differentials, Japanese yen is advantageous. Aussie dollar, I'm bearish on it more. Rate cuts on horizon after like earlier inflation worries this year, like lower rates dragging the Aussie dollar. Now New Zealand dollar, same. I mean, if you had watched the like previous two video, I had given some trade ideas on favoring GBP against Aussie and New Zealand dollar, and they played amazingly well because because of this sentiment, and technically it was like fitting with this general picture, and they were really nice trade ideas. On the euro side, I'm a bit like euro equities are doing really they have done really good since the beginning of this year. They're on like the path of rate cuts, but the thing is, since they have been the first central bank that has gone that fast on rate cuts, I think like after a point that is kind of priced. So I'm more like a neutral on there. Canadian dollar is one of the most uncertain currency for me because of the oil prices, because of the tariffs, and they cut rates, but then inflation spiked on January. There are like a huge uncertainty going on Canadian dollar. If you wanna, depending on your risk awareness, you can play out like you can have some game plan on Canadian dollar. And precious metals, I remain my bullish expectation on their real yields coming down. First of all, the base scenario for US is still rate cuts plus geopolitical tensions support the bullish case still. Maybe like if geopolitical case seems like getting better for now, but who knows? I mean, we don't have control on that for sure. When I don't have any control on that, my stop loss involves. Yeah, that's my like general a market overview, instrument based. And like a Tuesday's political speech, Trump's speech will be important. Non-farm payroll on this Friday will be so crucial, and we'll see how the market will digest tariff risks. And currently the uncertainty is leading the market pricing. If the focus stays on rate cuts, we might see, and if we see more disruption in economic growth side, we might see better pricing in risky assets, and we might expect the risk on sentiment to come back in. Let me show you a bit some major charts. First of all, I'd like to start with real yields. Remember that like real yields is generally has a high impact on precious metals. It's like when there's like a free risk-free. This is kind of like reflection of risk-free return. So if this comes down, then money, like the funds looking for other alternatives like precious metals, like equities, depending on the current situation. Right now, due to risk-off sentiments kicked in, real yields coming down, and like gold, precious metals doing well. And when real yields comes down, you invest in this like treasury yields with US dollar, then your demand on US dollars declines as well. So yeah, dollar index, that's how I'm tracking dollar index. This, if you're a follower of like a Rationale newsletter service or like a Marketsall, if you're following these videos, I'm following this dollar index with this weekly chart. This seems like a fake breakout in a technical language, and like this red line is 40-day moving average, and this like a black line is 10-week moving average. This is a weekly chart, so I'm expected to see some consolidation here, maybe depending on tariff issue. But like remember that rectangle chart patterns are generally both directional. It might go up, like it might for sure, like they can act as a continuation pattern, or they can act as a reversal. So here, if we see a breakout from here, the potential price target of this chart pattern is 114 levels. But if it comes down here, we might then will be monitoring a breakdown around here. That's how I'm following. That's why I'm neutral. I'm just like I'm trying to be unbiased on dollar index. Gold here, after like a huge rally, it's so natural to see such corrections like here, then symmetrical triangle chart pattern breakout. It moved really well. This was another trade idea was given in Rationale newsletter service. You can subscribe from the link below. Also, in like if you subscribe to Marketsall YouTube channel, in weekly videos, I'm trying to share these kind of trade ideas. And currently with that, especially last week, like risk on sentiment a bit kicked in. With that, we saw a little correction. This here in the daily chart is 21-day moving average. Blue line is 50-day, and red line is 200-day moving average. And yeah, we see correction, but still I will try to catch some opportunities to be long on gold. S&P 500, here you can see this 5,725 level seems like a pivotal level, as you can see. 1, 2, 3, and now we're here. Plus red line 200-day moving average is acting as support here. As you can see, we saw that price, then the price got rejected. And yeah, that's how I'm following S&P 500. The general rule for me in technical analysis, as long as the price is above 200-day moving average, still like my bias is on more bullish side. And that's why with that bias, after like seeing some consolidation and depending on like for sure data flow, I might be seeking to long again on US equities. And USD franc, why I'm showing this, franc is like a risk-off currency, and with the risk-off sentiment kicked in, as you can see, last 2 days there's like a huge red bars here, and that's why I just wanted to show you. And here there's a weekly chart, there's a rectangle chart pattern. USD yen, I think we're at a critical level at there as well. It's pivotal level. 1, 2, 3, tried, got back, and now forcing back again here. When you come to 4 hours chart here, here was also like if just as a like a game plan, I'm trying to show you one like this like a range, let's say, and after we see a breakdown from here. I mean, these are not like a chart patterns, but for the ones who are looking for more short-term trade ideas, like less than maybe like day trades, like a swing trades. I mean, here was like this level of 151 level was really nice area to be short, and it played out really well. But yeah, I generally try to focus on to see the direction of the market, daily or weekly charts. And yeah, sorry, my buys here, as I mentioned, yen long, which is like to see this chart to come down, and I think I'll like this, and the price is like below all moving averages. So 150 level, if we see a breakdown 49 below that level, to see a breakdown, it might be an opportunity to pull the trigger. So Russell index, here we might see a top with handle chart pattern formation after a point. This is like a small cap index of US equities. This is kind of reflection of potential sector rotation, especially from Magnificent 7 to to see a broad-based US equity move. That's how I'm tracking this one. If we see some reaction from here, then we can say that maybe the market is more focusing on rate cuts rather than diminishing profit margins of US companies. And here Kakaran, which is like a France 40 index, in the daily chart here, this was the rectangle chart pattern. It was given in one of these videos as well, and maybe head and shoulder continuation chart pattern might be formed here. We'll see. But yeah, it's like pulling back from this resistance level. That's how I'm watching this one. And like Nikkei USD futures here, I had talked about this chart when the price was around here. It tried to break out. It was not confirmed, then huge comeback. And as I mentioned, like rectangles are both directional generally, and we see a breakdown here. Still not convincing for me. I think it's still within the range bound, but I'm watching it like this. Yeah, Hang Seng Index quickly while I'm coming at the end to the end of the video. Weekly chart after this, like technology companies and Chinese government started to at least they started to have some talks. We saw this like a huge move since the beginning of this year. Here, that's where I'm mentioning, and it might be the potential breakout still. It's not confirmed for me, and yeah, that's how I'm watching. And I'll switch this one. And Bitcoin, still I think the uptrend is intact. I mean, it's pretty normal to see such corrections. Look, from this up until here, one correction, two correction, and now we're seeing the third correction. And as you can see, it's converging to the this red line, which is in the weekly chart. Red line is 40-week moving average. Again, we need to see some consolidation, and we might give some time it to consolidate. But while you're doing it, if you want to trade, I mean, yeah, in the daily chart, there's a really short term, probably like 60 months or something. I don't know. Yeah, around like approximately 60 days, which is 2 months, rectangle chart pattern was formed, and breakdown occurred, pullback. And yeah, if you wanted to be short up until here, you can play some short games, but the main trend is still uptrend for me. And yeah, Bitcoin was the last chart that I wanted to show this week. Thank you for watching, and if you just subscribe to Marketsall YouTube channel, we would be glad. And if also you can find the Rationale newsletter service link just below the video. If you subscribe there, you keep receiving these kind of trade ideas directly to your inbox, and in FX, futures, ETF, and stocks. I hope you enjoyed whatever you saw here, and I really if you can, yeah, like button, also subscription would be great for us. I hope you have a really good week. Have a good one. Bye.